Ray Dalio is considered one of the greatest hedge fund managers of all time. He founded Bridgewater Associates in the bedroom of his New York City apartment and grew it into the world's largest hedge fund. Currently, the fund has over $126 billion in assets under management, and they have a strong hold of the number one position. In this video, we're going to take a look at 3 stocks that Ray Dalio's investment firm has been buying recently. Bridgewater has more than doubled their position in all of these companies during the latest quarter. Dalio has built up his strong reputation due to his incredible long-term performance. And Bridgewater Associates has an average annual return over the last 28 years of 11.5%, doubling the total return of the S&P 500 during that time span, which only averaged 7% during that same 28-year period. So when you beat the market by 5 to 6% annually over 3 decades, you will see incredible outperformance, and Bridgewater Associates has provided just that to all their mega wealthy investors. So now, before we jump into the first stock this fund has been buying as of late, I am going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and on this channel we talk about the stock market, go over any major market news, and we track the progress of my personal stock portfolio that has now grown to a value of $174,000. So please hit that subscribe button, and now we're going to move straight in to the largest purchases Bridgewater made in Q3 2022. So during the latest quarter, this page outlines the 5 biggest additions they made to their portfolio. Coming in at number 5 was Johnson & Johnson, where they added 8.77% to their existing position. Then at number 4 was Google, where they added 49%, and of course I've covered the top 3 additions, which are the focus of this video. In the top 3 holdings, they more than doubled their existing position in the last 3 months. So if we take a look at number 3, that is Visa. The world's largest payment processor, they grew that position in the portfolio by 147%. And we can see the large spike in ownership during the last 3 months, and their current position is worth over $200 million. So if we jump over to Visa stock chart, they currently trade for $213 per share, and the company's flat over the past year, up only 0.96%. They have a market cap at $442 billion, with a forward PE ratio of around 26 and a very minimal dividend yield at 0.84. And over the longer term, Visa has been a great performer, and on the 5-year chart, they are up 88%. And at this current point in time, according to Morningstar, they are actually trading slightly below their estimated fair value per share of $205, meaning they're trading for a 10% discount at this current share price. So Bridgewater could hold a similar opinion on Visa's valuation, leading to the major pickup of shares during Q3. And if we take a look at the company's income statement, they've done a great job of continuously expanding their business operations over the past 5 years. Total revenue back in year-end 2018 was $20.6 billion. And fast forward 5 years to the trailing 12 months, they've now generated over $29.3 billion in total top-line sales, so continuous expansion annually. And if we take a look at the latest quarter, the company is not slowing down. Net revenue in Q4 2022 was up 19% year over year, their net income grew 10%, and their key business drivers like their payment volume, cross-border volume, and processed transactions all grew in the double-digit rate, which is incredible to see. And another strong aspect of Visa's business is their ability to generate positive free cash flow. If we take a look, in 2022, they generated over $18.8 billion of cash from their operations. They invested less than $1 billion in capital expenditures because due to the nature of their operations, they're not a very capital intensive business, and they generated over $17.8 billion in total free cash flow. So for investors, that's exactly what we're looking for. We're looking for growing positive free cash flow year over year, and Visa produces just that. And they returned a ton of this cash to their investors over the last year as well. They bought back $11.5 billion of outstanding shares, and they paid out $3.2 billion in annual dividends, which is absolutely incredible. So they returned around $15 billion of cash to their investors over the past 12 months. And if we take a look at their share count, year over year, they have been absolutely demolishing their outstanding shares, buying back more and more as time goes on. Back in 2009, the company had over 4.47 billion shares outstanding, and that has now declined to only 2.39 billion. So Visa does a great job of returning a ton of cash every single year to their investors, which is a very attractive metric, and I do believe that's part of why Bridgewater added them in the latest quarter. So that was the first company that Bridgewater added during Q3 of 2022, growing their position by 147% overall. And now if we take a look at the second largest holding that they bought, that was Microsoft, ticker MSFT. They added 156% to their existing position, and we can see over the latest 3 quarters, they have absolutely grown this position massively, growing from almost no holdings, and we can see rapid expansion quarter after quarter during the past year. So if we take a look at Microsoft, this company does not need much of an explanation. One of the largest brands in the world, they pretty much power most of the devices we use on a daily basis. They have a growing Azure cloud network that's performing very well, and overall, this is the largest holding in my personal portfolio. I'm a major bull on the company, and I completely understand why Bridgewater is buying more of the stock during the latest quarter. On the 1-year chart, the company's down more than 24%, and they're trading on the lower half of the 52-week range. So whenever a company as strong as Microsoft sees a major pullback like this, I always think it's a nice time to buy the dip and add to a position in this company. So we can see they have a market cap at $1.88 trillion, a current dividend yield at just over 1%, and are trading with a forward PE ratio of 26.5. And if we take a look at their Morningstar report, the estimated fair value per share on MSFT is at $290, meaning they estimate the company's trading at a 13% discount at this current point in time. So Bridgewater purchased another company trading below their estimated fair value. And now if we take a look at Microsoft's income statement, over the past 5 years, they've done an incredible job of expanding their total revenue, going from $110 billion back in 2018 to over $203 billion in the trailing 12 months, meaning the company's added over $90 billion of total revenue in only a 5-year time span. And if we take a look at the latest quarter, even though they're at a massive size worth over $1.8 trillion, they're still expanding their total sales in the double digits. Revenue in the latest quarter came in at 16% growth, and this was actually not even considered a strong quarter for the company. This was actually considered a mediocre result, still growing their top line by 16% annually, and their operating income grew 15% year over year as well. And if we take a look over the past quarter, their first quarter of fiscal year 2023, they still returned $9.7 billion to shareholders in 1 quarter. They returned close to $10 billion of cash to their investors in a single quarter, with $4.6 billion in share buybacks and $5.1 billion in quarterly dividends. And we can see the effect of the massive share buybacks on the outstanding share chart, which continues to decline quarter after quarter, and they've been doing that for the last 15 consecutive years. So overall, Microsoft was the second largest purchase Ray Dalio's portfolio made in Q3 of 2022. They grew this position by 156%. And now we're going to continue on into the last stock we're going to go over, the largest addition to the portfolio in the latest quarter, and that was ticker MDLZ for Mondelez International, the snack food company. They grew the position in this company by over 200% in the latest quarter. We can see a major growth in ownership in Q3 of 2022. So again, if we jump over to the company stock chart, Mondelez International, ticker MDLZ, is one of the largest snack food companies in the world. They currently trade for $67 per share and are up just over 7% on the 1-year chart. They have a market cap at $92 billion, a current dividend yield at 2.3%, and are trading with a forward PE ratio right around 23. And if we take a look, this company owns some of the top snack brands in multiple different product categories. They own Sour Patch Kids, Toblerone, Chips Ahoy, Ritz, Oreo, and many more, and they sell these products in over 100 countries all around the world. And if we take a look, again, another company trading below their estimated fair value. Morningstar has calculated a $60.41 fair value per share, meaning the company currently trades for a slight 5% discount from that expectation. And Mondelez International is not your typical snack food company. They're a global leader in many different segments. In the cookie industry, they are actually the largest company in the world, controlling 17% of the global cookie market share. Then for chocolate, they're in number 2, owning 12% of that market. Candy at number 3 at 5%, and in the gum industry, they're actually the second largest company, controlling 22% of the global gum market. So this company is a major player in the snack food industry. And if we take a look, in the chocolate segment, they own the number 1 brand in some of the largest economies in the world. Same with the cookie industry. They have the number 1 cookie brand in the world in Oreo, and Belvita is the world's number 1 breakfast biscuit. So overall, this company does a great job of owning and growing some of the largest brands we see in every store we go to. And they grow revenue through developed markets and also emerging markets. Emerging markets generate 35% of the total top line, and that's been growing at a faster CAGR over the past 3 years at 7.3%. So it's nice to see the emerging markets making up a large chunk of their total revenue, and they're not solely reliant on developed markets in order to generate sales. And if we take a look, the company's actually been improving their growth metrics over the past 3 years. Organic net revenue growth is accelerating. Their adjusted gross profit is growing as well. They've achieved long-term sustainability or a more consistent growth rate in their earnings per share, and they've seen a massive expansion in their free cash flow to over $3.1 billion. And over the past year, they've seen some great results: net organic revenue growth of 5.2%, adjusted EPS growth of 9%, and in the past 12 months, they've generated $3.2 billion of total free cash flow. And over the past 5 years, they've seen some incredible results as well. They're not going to grow at a rate of Visa or Microsoft, of course. This is a consumer staple company, much slower growth, but over a longer term basis, total sales are improving from $25.8 billion back in 2017 to over $30.4 billion in the trailing 12 months. And a common trait shared amongst all 3 companies we've gone over in this episode, and I'm sure is a trait amongst all the investments Bridgewater Associates makes, is the company's ability to return cash to their shareholders. Mondelez is doing just that as well. They've grown their dividend at a double-digit growth rate over the past 4 years, from 96 cents back in 2018 to over $1.33 in full year 2021. They continue to buy back more and more shares annually, and their total shareholder return over the past 4 years has grossly outperformed their peers. They've returned 20.9% annually compared to the peers at a rate of 13.8%. And over the past 4 years, they've been able to return $13.5 billion to their investors via share buybacks and dividends. And if we take a look at their outstanding share count, we can see over the past decade, it's continued to deteriorate, which is exactly what we want to see, going from around 1.8 billion of shares outstanding down to all the way to 1.379. So overall, the company's done a great job of returning a ton of capital to their investors year after year. So this was the 3rd stock and the largest purchase made in the last quarter by Ray Dalio. They grew this position in their portfolio by over 200%, a major addition, and like we saw, the company's been performing very well. I guess Ray Dalio believes the snack food industry is going to see some massive growth going forward. It's a consumer staple company that I do believe will continually generate revenue and growing sales for long into the future. So overall, those were the latest buys Dalio made in his portfolio. The market's been trading upwards over the past few weeks, which is a great sign, and Dalio picked up some of the best companies in the world. He added Johnson & Johnson, Google, Visa, Microsoft, and Mondelez International over Q3 2022. So overall, I'm going to wrap up the video by thanking you for watching all the way to the end. Of course, we took a look at all the purchases Dalio made in Bridgewater Associates over the past year. I want to thank you for watching the video all the way through. Please hit that like button and subscribe if you already haven't done so, and I will see you in the next video.